Ever stop to think about the invisible tech that makes your bank app work, or lets businesses manage huge sums of money? It's this vast, constantly changing world, a global finance software market. And today, we're doing a deep dive. We're going to give you a shortcut to understanding this powerhouse. We'll sift through the data, look at the growth from 2021 right through to 2033. Our goal: make sense of the numbers, point out what's surprising, and figure out what it all means for you. And just so you know, all this info comes straight from a detailed analysis by Cognitive Market Research. So let's jump in. Looking at the big picture, what's the first thing that, really jumps out about this market?
Well, the first thing is just the sheer scale, and maybe even more importantly, the fundamental shift it represents. We're not just looking at big revenue figures here. It's really about how finance itself is being reshaped globally. Okay, so back in 2021, the market pulled in over $103.5 billion. That's billion with a B. By 2025, the projection is nearly $159.2 billion, and then looking further out to 2033, it's expected to hit an incredible $376.1 billion.
Wow. Okay, that's massive growth.
It is, and it works out to a global compound annual growth rate, the CAGR, of about 11.345%. Pretty consistent, strong growth. And maybe we should quickly define finance software, too, just to be clear.
Yeah, what falls under that umbrella?
It's broad. Think core systems for banks, investment platforms, the ERP software companies use for their finances, but also, increasingly, those apps you might use yourself for budgeting or managing investments. It covers a whole lot.
Got it. So institutional stuff right down to consumer apps.
Exactly. Now, that global growth, at 11.3%, it's a strong headline number. But things get really interesting when you start digging into the regions. There are some fascinating variations, and actually one slightly odd figure in the data we should probably address.
Okay, let's definitely unpack that. North America, usually seen as a pretty mature market, right? Maybe even saturated in some areas. What's the story there? And what's this odd figure you mentioned?
Right, North America is the giant in terms of current size. Over $42 billion back in 2021. It's forecast to grow to around $63.6 billion by 2025, and then hit about $145.5 billion by 2033. So still huge growth in dollar terms. But here's the really interesting part you picked up on. The regional CGR listed for North America, it's reported at a tiny 0.109%.
0.1%. Wait, that can't be right, can it?
Okay.
Compared to the global average of over 11%, how does that square?
Exactly. It looks really strange at first glance, especially when you contrast it with the global picture.
So how do the individual countries inside North America stack up? Does that help explain this really low regional number?
It absolutely does. This is where looking deeper is crucial. The United States, for instance, shows really healthy growth. It went from about $34.3 billion in 21, projected to reach over $117.2 billion by 33. That's a CAGR of nearly 10.8%. Very strong.
Okay, 10.8%. That sounds much more like it.
Right, and Canada's similar. It's moving from just over $5.2 billion to almost $19.4 billion. That's an even higher CAGR, 11.5%. And Mexico isn't far behind either, growing from about $2.5 billion to nearly $9 billion, with an 11.1% CAGR.
So U.S., Canada, Mexico, all growing around 11%. But the regional average is somehow 0.1%. How?
It raises a really important point about aggregate data, The source bundles everything together. It's highly likely that this low regional CAGR is, well, it's probably an artifact. Maybe how some very specific niche or perhaps legacy slow-moving segments within the huge North American market are weighted or categorized in the overall calculation.
Okay. So it could be dragging down the average even while the main parts are booming.
Precisely. It might be a mix of really high-growth areas and some very mature, almost static foundational systems averaged together in a way that produces that number. It's a good reminder to, always question the headline figure and look at the components.
That clarifies things a lot.
Yeah.
So North America is growing strongly at the country level, despite that peculiar regional average. Okay, let's shift gears then. What about Europe? How does it compare across the Atlantic? Is it keeping pace?
Europe is definitely a major player. It started at around $20.4 billion in 2021. The forecast sees it growing to nearly $70 billion by 2033. That gives it an overall CAGR of about 10.8%.
Okay, 10.8%. So pretty solid, just a touch under that global average.
Exactly. Consistent growth across the region.
And if we zoom in, which countries are the main drivers there? Any standouts or surprises in Europe?
Yeah, there are some interesting points. Germany really stands out. It's projected to go from nearly $4 billion in 2021 to over $14.4 billion by 2033. That gives it the highest AGR in the region, almost 11.5%.
Wow, Germany leading the pack there. Why do you think that is?
Well, it likely reflects Germany's strong industrial base. Lots of large companies investing heavily in automating their complex financial operations.
Good sense.
The UK is also showing strong growth, about $2.9 billion, up to over $10.3 billion. That's an 11.1% CGR. So also very healthy. France is another key one, moving from roughly $2.5 billion to nearly $8 billion. And then you have countries like Italy, Spain, Sweden. They're all showing good growth too, maybe slightly more moderate rates, but it indicates this broad adoption. Digital transformation is a big theme across the continent.
Interesting. Okay, now, the source specifically called out Asia-Pacific as a high-growth zone. What does that actually look like in numbers? How does it stack up against North America and Europe?
Oh, Asia Pacific definitely earns that label. It kicked off at $26.5 billion back in 2021, and the forecast, it's expected to surge past $106.4 billion by 2033.
Over $106 billion.
Wow. And the CAGR there is impressive, almost 12.3%. That makes it one of the fastest growing regions globally.
Okay, 12.3%. What's fueling that?
It's a mix of things. Rapid digitalization is huge, of course, plus a growing middle class with more financial needs, and also a lot of government initiatives pushing for financial inclusion.
So which countries are really leading the charge in APAC? And are there unique things happening in those specific economies?
China is, unsurprisingly, a major force. It started around $7.9 billion in 21, projected to jump to over $32.4 billion by 2033. That's a CAGR of nearly 12.5%, so slightly above the regional average, driven by sheer market size and really aggressive digital adoption.
Okay, China's big. Any other standouts?
Yes, the real acceleration story might actually be India. It's forecast to grow from $3.7 billion in 2021 to almost $16.5 billion by 2033. And check this out. India has the highest regional CAGR at over 13.1%.
13%. That's huge. What's behind that specifically in India?
It seems to be a combination of factors. A massive shift to mobile-first financial services, a very young, tech-savvy population, plus a big governmental push towards digital payments and formalizing the economy. It's like a perfect storm for fintech growth.
That really highlights the potential in emerging economies, doesn't it?
Absolutely. And then you also have Japan, South Korea, Australia. They're showing significant growth too, maybe not quite as explosive as India, but still very robust, diversified markets within the region. Singapore and Southeast Asia generally are also growing fast.
Fascinating picture in Asia Pacific. Okay, let's turn our attention south now. What about South America? What's the finance software trajectory look like there?
South America is also seeing really significant expansion. A market was valued at $5.8 billion in 2021, and it's projected to grow substantially, reaching almost $21.9 billion by 2033.
Okay, nearly quadrupling. What's the growth rate?
The CGR for South America is strong, about 11.6%. So again, nicely above that 11% mark, indicating a really solid move towards modernizing their financial infrastructure.
And within the continent, which countries are driving that 11.6% growth?
Brazil is the leader there, as you might expect, given its economic size. It's projected to grow from just over $2 billion in 2021 to about $7.5 billion by 2033. A lot of drive for efficiency and digital services there. Argentina is also showing impressive growth, moving from about $1.2 billion toward nearly $4.8 billion by 2033. And then countries like Colombia, Peru, Chile, they're all on similar strong upward paths. It reflects this broader regional trend, adopting digital payments, using cloud-based tools to manage finances better.
Okay, makes sense. How about the Middle East? What's the picture there? Often see news about diversification efforts, smart cities. Is that translating into finance software growth?
It absolutely is. The Middle East is definitely a rising market in this space. It's projected to expand from about $5.5 billion in 2021 to over $20.3 billion by 2033. The CAGR is healthy too, around 11.5%. And yes, that growth is very much linked to those economic diversification plans. Huge investments in digital infrastructure, smart city projects. It all requires sophisticated financial tools.
Interesting. Are there specific countries really pushing that growth, maybe at surprising speeds?
Yes, the UAE definitely stands out for its pace. It's forecast to grow from just over $700 million in 2021 to nearly $2.9 billion by 2033. And its CAGR is the region's highest, over 12.4%.
12.4%. What's driving the UAE specifically?
Well, it ties into their ambition to be a major global financial hub, right? They're adopting cutting-edge tech very quickly.
Got it.
Saudi Arabia is also making big strides linked to its Vision 2030 plan, climbing from about $1.5 billion to nearly $5.9 billion by 2033. Turkey's another strong performer, and you see solid growth projected for Egypt, Qatar as well. It really points to a region-wide digital transformation push in finance.
Okay, one continent left to explore in detail, Africa, often talked about for its potential, leapfrogging technology.
Yeah.
What's the outlook for finance software there?
Africa's market is showing robust growth and, yes, a lot of promise. It was valued around $3.3 billion in 2021. The forecast sees it growing to over $12.2 billion by 2033.
Over $12 billion. And the growth rate?
The CAGR is around 10.8%. So again, respectable, solid growth. And it's really powered by factors like increasing mobile phone use, huge penetration. There are lots of financial inclusion initiatives, and the rise of really innovative fintech solutions designed specifically for local African contexts.
All right, the whole mobile money phenomenon started there in many ways. Which specific nations are key to this growth?
South Africa is a major player. It's expected to grow from about $1.1 billion to over $4.6 billion by 2033. Nigeria is also very significant. Its market is projected to expand from around $500 million to nearly $2 billion.
Okay.
In both these countries and others, you're seeing much wider adoption of digital banking, mobile payments are massive, and more businesses are using financial management tools. And the rest of Africa category also shows strong collective growth, which really underlines this continent-wide trend of using digital tech to bypass older infrastructure limits and expand financial access.
So we've toured the globe, seen some incredible numbers, North America's surprising average but strong countries, Europe's steady growth, APAC's boom led by China, and especially India, South America, and the Middle East rising fast, Africa showing great potential. What ties it all together? Beyond the billions, what are the fundamental forces pushing this huge upward trend everywhere? What's the big takeaway for someone listening?
Yeah, if you connect all those regional stories, a clear picture emerges. This isn't random. It's driven by some powerful global shifts. First, there's just this overwhelming need for more automation in finance, everywhere. Businesses of all sizes want to do things faster, cheaper, and with fewer errors than, doing it all manually. Software is the answer.
Right, efficiency.
Exactly. Second, there's the massive shift to digital financial management generally. Think about it, both businesses and individuals. We're all moving away from paper and queues. We expect seamless online banking, instant payments, easy investment tools on our phones.
Yeah, that's definitely true for me.
And the third big piece is the cloud. The widespread adoption of cloud computing has made really sophisticated finance software much more accessible. It's more affordable, it's scalable. Even a small startup can now access tools that maybe only giant corporations could afford before. No need for huge IT departments just to run your books. So what? The takeaway. It's profound, really. Businesses, individuals, we're all becoming increasingly reliant on this software to manage money. It streamlines everything, makes finance more accessible, drives efficiency across the whole global economy. It's not just tech for tech's sake. It's fundamentally changing how value is managed and exchanged.
So a truly consistent, powerful growth story we've uncovered today for finance software right across the map, from established players to those rapidly advancing economies. And it's clear it's not just a fleeting tech trend, but really a response to fundamental needs. Efficiency, digital transformation, accessibility. Just a reminder, all the numbers and insights we dove into came directly from Cognitive Market Research's analysis. We really hope this deep dive gave you some aha moments, maybe a shortcut to feeling informed about this crucial, often invisible sector.
And it really leads to a fascinating question to ponder, doesn't it? As this finance software gets even smarter, think AI integration, more sophisticated cloud capabilities. What does that mean for us? What new skills, what kind of financial literacy will be absolutely critical for individuals and for businesses to not just cope, but actually thrive in this increasingly automated digital financial world that's evolving so incredibly fast? Something to think about.
Welcome back to the Deep Dive. Today we're jumping into a really dynamic area, the global finance software market. Our job here is to sift through the noise, pull out the key stuff from our source material, that's Cognitive Market Research today, and get you up to speed fast. And believe me, the landscape here is shifting dramatically. Okay, let's unpack this. The global finance software market was valued at $103.576 billion back in 2021. Pretty big already,
Oh,
right?
absolutely, a significant number.
But get this, by 2033, it's forecasted to hit a remarkable $376.105 billion.
It's quite the jump, isn't it? We're looking at a compound annual growth rate, a CAGR, of about 11.345%. Solid growth. And that really highlights how finance software isn't just, a back office thing anymore. It's strategic now.
Strategic, okay. So what's pushing this? Why such explosive growth? The numbers are huge, but what's behind them?
Right. The why is crucial. The source material points to three main drivers. First off, there's this increasing, almost urgent demand for immediate financial analytics. Think about it. The economy's volatile. Businesses can't wait weeks for reports. They need data now to make smart moves.
Real-time data, so less looking back, more looking ahead.
Exactly. Finance software enables that shift. We're talking real-time dashboards, automated reports, live performance tracking. It lets businesses see what's happening as it happens.
And that's needed everywhere, I guess.
Pretty much indispensable in sectors like retail, manufacturing, and obviously financial services itself. Speed is key.
Okay, speed and immediate insight. Driver number one. What's next?
Well, that speed connects nicely to the second driver.
Yeah.
The really widespread adoption of cloud-based financial solutions. The cloud has been a game changer here. It brings scalability. You can grow without massive new investments. It offers remote access, which is huge for distributed teams. And critically, it's cost efficient.
Cost efficient how? Doesn't new software cost money?
It does initially. We'll get to that. But cloud solutions often cut out the need for expensive servers and dedicated IT infrastructure on-site. Think about platforms like QuickBooks Online, Xero, SAP, Oracle Cloud ERP. They're making powerful tools accessible globally, even for smaller businesses.
Right. Accessibility and scalability. Makes
Sure.
sense. But with all this data flying around in the cloud,
Yeah.
security must be a huge concern, right? Or is that another driver?
You've hit on it perfectly.
Right.
That leads us straight into the third core driver,
Mm.
compliance with regulatory standards. It's absolutely vital. We've got global regulations like SOX in the U.S.
Sarbanes-Oxley, right.
Exactly, and GDPR for data privacy in Europe, AML for anti-money laundering, IFRS for accounting standards. It's a complex web. Finance software is becoming essential just to navigate all that. It automates compliance checks, creates audit trails, minimizes risks. It's not just about avoiding fines, it's about trust and transparency.
Wow. Okay. So immediate analytics, cloud adoption, and navigating complex regulations. Those are definitely powerful forces. Here's where it gets really interesting for me, though. Does this look the same everywhere? Or are some regions just exploding faster than others? What's the global picture look like?
That's a great question. The regional breakdown is fascinating. Growth is global, yes, but the pace and scale differ quite a bit. North America, for example, is still the heavyweight champion. It was over $42 billion in 2021.
$42 billion, okay.
And it's projected to hit around $145.5 billion by 2033. The U.S. is the main engine there, obviously. Expected to go from about $34 billion to over $117 billion.
So still dominant, but who's growing fastest? You mentioned differences in pace.
Right. Europe is also showing really strong, steady growth, expected to more than triple, maybe reaching close to $70 billion by 2033. Germany and the UK are big players there, but the area showing the most aggressive growth, that's Asia-Pacific, hands down.
Asia-Pacific, okay, tell me more.
We're looking at growth from around $26.5 billion in 2021 to potentially over $106 billion by 2033. That's almost quadrupling. The CAGR there is the highest, nearly 12.3%.
Wow. Which countries are driving that?
China is a huge part of it, projected to exceed $32 billion. But India actually has the highest country-specific CAGR globally, over 13%.
13% CAGR for India.
Yep. Expanding from just under $4 billion to nearly $16.5 billion. It really signals a major shift in, well, the global financial tech landscape.
Yeah.
Japan, South Korea, Australia, Singapore, all growing significantly too.
That is incredible. A real shift in gravity, like you said. What about other emerging markets? South America, the Middle East, Africa.
They're absolutely part of the story. Significant expansion across the board, though starting from smaller bases. South America, for instance, is forecast to grow from about $5.8 billion to nearly $22 billion. Brazil leads the pack there.
Almost quadrupling, too.
Exactly. The Middle East, similar story, from around $5.5 billion to over $20 billion. The UAE is notable for its fast growth within the region. And Africa, growing from roughly $3.3 billion to over $12 billion. South Africa and Nigeria are key markets driving that.
So it's genuinely a worldwide phenomenon.
Yeah.
This software is becoming embedded everywhere.
It really is. The drivers we talked about, analytics, cloud, compliance, They resonate globally.
Okay, it's an amazing growth story. But it's not all smooth sailing, is it? No market grows like that without hitting some bumps.
What does this all mean for companies looking to dive in? What are the hurdles?
You're absolutely right. The source does highlight some key restraints, things slowing down adoption in some cases. The first one is pretty straightforward, the high initial cost of implementation and integration.
Ah, so even a cloud savings getting started is pricey.
It can be.
Yeah.
Setting it up, customizing it for specific business needs, training staff, that upfront investment can be substantial, especially for smaller businesses or maybe firms in developing economies. Right, the initial barrier to entry. Makes sense. What else? You mentioned security earlier.
That's the second major restraint, data security and privacy concerns. And they're significant. We're talking about incredibly sensitive financial data, the fear of breaches, unauthorized access. It makes some companies hesitant, especially about moving everything to the cloud.
Even with better cybersecurity these days.
Even with advancements, yes. The potential consequences of a breach, legal, financial, reputational, are just so high. It remains a top concern and, for some, a barrier.
Okay, cost and security, what's the third hurdle?
The third one is the complexity of migrating from legacy systems.
Legacy systems.
Yeah.
Like old established software.
Exactly. Many companies have older financial platforms they've used for years, sometimes decades. They might be heavily customized. Moving all that historical data, connecting it to new systems, avoiding disruption during the switch, it can be a really complex, resource-intensive project.
And I imagine getting employees on board with a whole new system isn't always easy either.
That's a huge part of it, too. Training, overcoming resistance to change. It all adds to the complexity and can definitely slow things down.
So costs, security risks, and the sheer difficulty of switching from old ways. Those are definitely real challenges. But innovation doesn't usually stop for challenges, right?
Yeah.
What's coming next? Are there emerging trends that might tackle these issues or just push the whole field forward again?
Absolutely. The innovation cycle is relentless here. The source points to 3 key emerging trends shaping the future. First, and maybe the most talked about, is the deeper integration of AI and machine learning.
AI in finance software. What does that actually do?
Well, it's moving beyond just automation. AI is being used for much more sophisticated tasks. Think advanced fraud detection, much more nuanced risk assessment, even predictive financial forecasting with startling accuracy.
So making the software smarter, more proactive.
Precisely. It's about using data to anticipate issues and opportunities, not just report on the past. It could potentially help with security analysis, too.
Interesting. Okay. AI is one. What else?
The second big trend is embedded finance, often using API-based integrations.
Embedded finance, meaning?
It means financial tools are being built directly into non-financial platforms. Imagine getting a small business loan offered directly within your inventory management software, or payment processing built seamlessly into a retail app.
Ah, so finance becomes part of other business tools, almost invisible.
Kind of, yeah. It makes financial services more contextual and accessible, right where businesses need them. APIs allow different software systems to talk to each other easily, making this possible.
That sounds like it could really change how businesses access financial services.
Yeah.
Okay, AI, embedded finance.
Yeah.
What's the third trend?
The third one is a real focus on user experience specifically, making interfaces much more user-friendly and mobile-optimized.
Making it easier to use, basically.
Exactly, especially as smaller businesses and remote teams rely more on these tools. They need software that's intuitive, accessible on a phone or tablet, and doesn't require a finance degree to operate. Ease of use is becoming a major competitive differentiator.
Makes total sense. If it's complex, people won't use it effectively, no matter how powerful it is.
Right. It needs to be powerful and accessible.
So there you have it. This deep dive really shows the finance software market isn't just expanding like crazy, it's fundamentally changing. Across every continent, every industry, we've seen the need for instant insights, the massive shift to the cloud, the complexities around compliance, and yeah, the security concerns too.
And how AI, embedded finance, and user experience are now shaping its future.
It's clear this software is absolutely essential now. And just a reminder, all these numbers and insights came straight from that comprehensive report by Cognitive Market Research. It leaves you thinking, though, with these huge figures and tech shifts, how might finance software fundamentally change the way you interact with money? Not just in running a business, but maybe even in your day-to-day life over the next decade. Something to ponder.